Tomorrow we get the CPI numbers, and CPI is expected here. We are expecting, in terms of analyst forecasts, we're expecting 2.5% year over year inflation. Now, let's just assume for a second that we do get 2.5% year over year inflation tomorrow. Let's just assume that we get that. If we get 2.5% year over year inflation, how are we doing in terms of the inflation progress? Well, I think you have to, in order to answer that question, to say, how is inflation going, is to look at the direction of inflation, right? Similarly, when we're talking about, interest rates, or we're looking at GDP growth, PMI data, what is very important, not only to the statistic that comes out, but it's the direction that matters. And so markets are continuing to see this multi-year cool off in inflation that we've seen post-COVID. So tomorrow's print is expected to come in at 2.5%, right around here. Okay. Now, is that damaging to the big picture story here? I would say no, not really. Inflation still generally seems to be headed lower. But guys, the thing is now, for quite some time, inflation was like everything we talk about on this channel. We talk about, inflation's bottoming out, or it's still at 7%, 6%. Those were scary inflation figures. And for quite some time, the market has really paid close attention to the CPI report. Last week, however, I think you started to see a stronger shift towards a bigger focus on the labor statistics than the inflation statistics. Look, inflation is pretty evidently moving lower. It's hard to make a case that right now inflation is already trending higher. Now, you may say, well, with those big old tariffs, if those go into play, we may see inflation really truly bottom out and start to move higher again. I hear you on that. That's very possible. But right now, it's hard to say, looking backwards, okay, look, we've had some incredible progress on inflation. So I think with the NFP report coming in, it didn't massively beat. We talked about this yesterday. The NFP report did come in better than expected, but it was not like some incredible beat. It wasn't like this monstrous outperformance, right? ADP missed expectations pretty sizably. Unemployment rate remained flat at 4.2%. This is still healthy. Unemployment claims went up last week. We'll see if how they come out this week. So the jobs data is now kind of more in focus in my view, but you have cooling inflation, and that's a really good thing for the markets. Let's just take a quick look here in terms of the markets, see how things are moving this morning. You've got S&P 500 and NASDAQ again flat yesterday, very indecisive move. However, Russell's been moving. We're still moving and grooving on the Russell, which is great. I have a long position on the Russell. This has been a really good play for me here recently. I did trail my stop loss. Took my stop, moved it up here just behind this doji looking candle here on the daily chart, but specifically on the 4-hour chart, I just liked this level of support, right? So we had kind of the big push back up to these highs, right? And we were able to actually break through that level. So when that happened, I just said, okay, take that stop, put it right here. We kind of built a base and shot off this level, right? So basically, I'm willing to continue to hold this position as long as we can hold this level of support. But as we continue to push higher here, things are now looking even more promising for the Russell. I may get an opportunity to trail a stop even further. But I really don't want to crowd this trade. But I mean, I don't want to get too fancy with it. I basically just think that the Russell has more upside, and I'm not too worried if it pulls back here and bounces off, or if it even pulls back here and it bounces off. I'd be happy to hold those trades. So sometimes people will ask, Nick, why don't you trail that stop further? Why don't you lock in more? Trust me, sometimes I wish I had. For example, if we get, a sell down in stocks right now, I'm going to kick myself and be like, dang, I shoulda, coulda, woulda. I wish I put my stop loss here. But you have to think about this. Technical analysis, I've been thinking about this a lot recently. Technical analysis for me doesn't have a ton of predictive power of what the market's going to do next. It's really just a risk to reward measuring tool for me. Like if I think that this market is going to go up as a big picture, which I do, according to my system, the Russell, I don't know if it's still bullish. Oh, it dropped down to neutral here recently. But the Russell has been a generally bullish instrument in the Edge Finder. We've had the S&P 500, NASDAQ, Dow. Those three are still getting bullish ratings. So I generally think indices are going to continue to move higher. So if my bias on indices is I think we are likely to continue to move higher, right? Then how do I want to play this? Well, I don't want to squeeze this stop loss right here and say, not only do we have to move higher, but we have to move higher right now or I want to get out of the trade. I like to trail stops loosely because if my directional bias is still up, then I don't want to crowd the trade. When I say crowd the trade, I don't want to make my stop loss like right. I don't want to tighten it so much that any sort of normal daily action would get me out of the trade.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edge Finder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
Taking a look at the dollar index, we're just sitting back here. Made the point that the NFP report here recently, which we have covered a lot on the channel, it was a beat, but you can't get too excited about the beat because it was such a narrow beat, right? So the NFP report was good, which did shoot up the US dollar on Friday, right? We had a little bit of a pop on the US dollar, but you can see it already kind of fading and just not showing a lot of follow through. And I'm not surprised by that because when we take a look at our heat map for the US, a lot of our metrics for the US dollar are in the red. We have very negative sentiment or negative data points dropping for the US dollar here recently. PMI is negative. We get inflation tomorrow. This is going to be really important because, you know, if there is going to be something that's going to turn the ship a little bit for the US dollar this week, it would be CPI and PPI. Like if you get like a 2.6% inflation reading or 2.7, I mean, that would cause some revival, I think, in the US dollar bullish trade. But most likely, I think we're going to continue to gradually cool in inflation. So I don't see a strong case at this time for a bullish side of things on the US dollar.
But I want to go over what I'm going to be looking for dollar, right? So the dollar is in a place where obviously it's very bearish. Despite the decent okay NFP reports, all that got faded back down. Despite US and China having a conversation today and, you know, knowing that it went well yesterday, dollar's still down. So it seems like despite hints of good news, dollar is heading lower. So, you know, this level here at the 97 handle, 97.9 is the worst case scenario. And, you know, tomorrow we have CPI. We also have PPI coming in supposedly better than expected. We also have Michigan consumer sentiment. If you guys look at the bottom at the calendar here on TradingView. So those are supposed to come in better than expected. And if CPI does come in hot tomorrow, then we can expect dollar to potentially get a little bit of a rally. And what I'm looking to do is fade any short-term dollar appreciation. So whether it means shorting it at the 100 handle, or maybe maybe later today, Trump says that, you know, US and China went really, really well, progression, solidified deals, and we trade up to that level today. And then with the extra push of CPI tomorrow, we trade a little bit higher. Regardless of it, I'm looking to fade any short-term dollar appreciation if the setup looks good technically. Now, if we just keep getting green candles, solid green candles, candle after candle, then I'll sit back and wait until we see a loss of momentum or a slowdown, and then I'll go ahead and short dollar. So let me go back to see how you guys are doing. Yo, Alan, what's good? What's good, man? You're very pretty today. Don't worry. I appreciate that. I tried my best. Do need a haircut though. MA, how you doing? Hey everyone. Hey Gerald, nice to see you. All right. Do you mind showing us the economic heat map? Kids way, I will. That's part of the my what's the word I'm looking for? Part of the process that I'm going to do today. So I'm going to show technically what I'm looking to do as far as shorting the dollar. And then I'll go over to look at the fundamentals, and I'll show the heat map as well to see and showcase how you can use fundamentals and technicals to kind of set up a trade. No worry, man. Lee Allen jumping on fading down dollar. Ball out. You've been saying dollar to 95.96, but you haven't said when. And I agree with you, but the when factor is the difference between a profitable to unprofitable state. So if I do a market order now and say dollar to 95.96 and no stop loss, then sure, it can get there eventually. But what if we get into 300 400 pips to draw down, 100 pips to draw down? It's not the best scenario. So I agree with you there, and I do agree that perhaps we can get another short-term dollar appreciation, a move higher where you can short at a better risk reward ratio, you get better prices, all that stuff. So I agree with you on that front. So what I would look technically on the dollar, and I'll just look at the dollar index, and then we can kind of go into the more specific pairs. Dollar index here, I would like to short originally or initially here at that $100 handle. Now, a lot of my strategy and my approach is discretionary. So let's say we get this push up to the 100 handle with lots of momentum and we keep going, then I'll sit and wait, right? So before I short, I want to be on the, if you guys know Lance Breitstein, he very much preaches being on the right side of the V. Essentially, you want to be at the already other side of the flip of the move, right? So I'm not just going to short if we get up to the $100 handle with strong candles. I want to see it start to taper off, right? So that's essentially what I'm doing. So at the $100 handle, if we blow past it, then I'll wait, be more patient, and try at the $102 handle. But essentially being on the right side of the V. And what I would look for on other pairs, I did post my chart markups in the Telegram, which is completely free if you guys want to go into that one. But I want to get ahead and look at the pound and the New Zealand dollar. I'll start with the pound dollar. Pound last night, I'll pull it up here for you guys. Actually, to this screen. 1 second, guys. Here it is, Financial Juice. Pound last night, if you can see, let me get this epic pin. Got a mix of employment data for the pound, and it came out worse than expected. You see this with the employment change coming up positive. But for the most part, the pound saw some weakness last night because of its employment figures. And if you look at the chart, what happened was it got sold off, but this level of support that we've established as support got bought into, showing that buyers are stepping in this level. So perhaps if the US sees that hot CPI print tomorrow, we send it lower, this will be a good opportunity to go ahead and buy the pound. And this level has been holding ever since May 20th. So it's been holding for a while. This is a good level. We've already established it. And then target wise, I'll target something like the 3,600 level right here. And then if we blow past that, then obviously we trail stops. So for the pound, that's what I would do. Also, just to kind of add on to the fundamental outlook for the pound, you see that retail is heavily short. 65% of retail traders are short. 35% are long, which is a good confluence, right? If the retail is heavily sided one direction, you want to take the opposite side of that. COT data, last time I checked, it was pretty good. Let's see, pound. Actually, no, pound. Where's pound at? Net position is 35,000 net to the long side, whereas the dollar is only 617, right? So this could be a make or break week, because if we see a bad CPI print or continued bad data for the US, we could probably expect that come Friday, this net position is going to drop, for the dollar. So that will be a good confluence as well. And if we also look at the economic surprise meter, the pound is still pretty resilient as far as beating expectations. So despite last night, 86%, beating expectation, that is a very good thing for the pound. So that is what I would look like, or how I would participate in dollar weakness. And I know that was a lot to throw at you guys in a short amount of time, But that's pretty much how you can use the fundamentals and the technicals as well to build a good trade, because you could technically participate in other ways, right? You could go, for example, if you want to short the dollar, you can short it by, I don't know, you could say the Swiss, right? But the Swiss is not the best. I think the best case scenario is in Forex, when you're trading two pairs, the quote and the base currency, strong versus the weakest. You want to make sure that divergence is as wide as possible to get the most lucrative move that you possibly can. Another one that I would really like to participate in is the New Zealand dollar. Ever since April 9th, was it? April 9th? 8th, 9th, yeah, whatever. Look at that. Strong move up. And I would have expected that we could have at least broken this level of support here and filled some of this, but we didn't. We've been trading above it, and now we're, on last Friday, was it? Or last Thursday, we broke off of the support. We seemed like a fake out at the time in hindsight, but now we're trading right above it in those levels, showing me that buyers are just stepping in at any chance of a retracement. And the New Zealand dollar, similar to the pound, has been really resilient. If you look at the Eagle surprise meter, it's no surprise why the price action matches the fundamentals. I mean, this would justify right then and there. Someone asked me to look at the heat map for one of the countries. Let me see. If you could re-ask that question. I'm scrolling through the chat. Oh, U.S. Eco heat map. Got you. Yeah, U.S. Eco heat map it was more red. It's starting to get a little bit better, depending on the prints for this upcoming week. We kind of get a better picture. But just look, it's showing pretty mixed bag. Tells me that it's not in the best shape. It's not the best performing asset out there. There's better ones out there. So let me go back down. Let me scroll back down. King Lambo Allen dropping the wisdom. Bashy, good to see you, man. Haven't seen in a while. Besides the 24-hour stream that James did, which was really cool, man. I hopped in and out of it all day. Great entertainment throughout the day. That was like awesome. That was like, imagine one of your favorite shows is on 24/7. You can watch it whenever you want live. That was pretty much me. Bugatti Bashy in the house. Ball out. Let's not ignore the fact that you are Bugatti Ball out. I'm the one that assigned you that. You can't throw that off to Bashy. But yeah, let's get back on track here. So the New Zealand dollar would be my preferred vehicle of choice when participating in dollar bearishness. This thing has been bought up every chance it gets. Similar to the pound, if we go to retail sentiment, give me a second to pull it up. Here it is. New Zealand dollar, where are you at? These are every other ones, right? It should be here. Come on. Are you not here? Let me just do New Zealand dollar's not on here? Okay, let's do this. Let's check it on Forex Factory, because they have their own. They have a tab, unless they're just not showing. Okay, New Zealand dollar. It's pretty much 50-50. 51% of retail traders are net short, and 49 are net long. So actually, it's a pretty mixed bag on the New Zealand dollar front. So, and then also, what also is a good confluence for the New Zealand dollar. If we look at COT data history, which was what I was looking at just now, and we pull up New Zealand. Oh, there it is. Got you. Good net change here. It's, it was at a point where it was super just bearish. And I think now we're starting to come up a little bit from that. So we had some long contracts added and short contracts being removed. So I think that the New Zealand dollar was in a position where it was extremely, oversold over a week. If we look at the weekly chart, it got down to these very extreme levels, 2020 lows, 2022 lows. And now we're still starting to recover. If we are, let's say we're hitting the lows for 22 and 2, we should also consider the highs for that year or for that area, that timeline. In my opinion, if the dollar, weakness continues, we could get up to, I don't know, maybe this level here. Let me draw it out for you guys so you can see what I'm talking about. something like this, right? If we see continued dollar bearishness, cooler than expected CPI print, which will be good for the dollar, but good for the inflation, economic health of the U.S., but bad for the dollar currency. That could give the Fed that confidence to start cutting their rates, and yeah, we could see traders starting to price in those rate cuts, and we could potentially see New Zealand dollar trading up to this level, at least the 6,200 level. That is something that I could see is not off the table.
Markets again today, pretty calm. Like I said, calm before the storm. Watch that rising wedge. There's going to be some, I don't know, there's going to be something exciting happening this week. I just don't know what direction, if we get the market excited about better inflation, maybe it prints hotter, maybe the market doesn't like it. We've been watching the kind of the truth reading for a little bit. We have been elevated off these lows a little bit. So, down here at like 1.22, now up to 2.08, fading a little bit, but still, we've come off the lows. We've had headline CPI hit a bottom at like 2.3%. It's forecasted for tomorrow to print at 2.5. Okay, so if you go to the Bloomberg calendar, that's what I'm looking at. It's basically Wednesday, Thursday, and I'm just watching the year over year. That's interested in for tomorrow's data is the headline CPI year over year and the core CPI year over year. Both are expected to be printing slightly higher. So your core CPI year over year right here. Previous is 2.8. It's forecasted for 2.9. So market's anticipating a slightly higher print in CPI. And then you go the headline CPI year over year. Previous was 2.3 and forecasted for 2.5. So both expected to see higher CPI prints. Now, if the market prints tomorrow, let's say that we print 2.4. So headline CPI is slightly higher than previous, but better than expected. Maybe that's a good thing for the market. I'd say maybe the downside would be if we print like a 2.6 or higher, right? Or this prints like 3% again or higher. I don't know if the market's going to take that with a lot of, a lot of positivity. I don't think anything is really going to derail this market. I think if anything, what you need to focus on is this market going to offer up dips? That's it. In this environment, if we're going to spend $2.5 trillion and pass a tax bill by July 4th or by Independence Day or whatever this, 11th hour holiday is going to be for Congress to pat themselves on the back, any pullback opportunity to me is a chance to position options for income or, generate. It's like if I'm going to own something, I'm going to own the SPY like way, way, way lower. Otherwise, I'm just going to look at income trades. Okay. What up, dude? So anyway, any dips, that's what I'm looking at. I don't know the why. Like if this pulls back, why? Is it higher inflation? Is this something that Trump said? Is this something with this 90-day pause? Who knows? There's going to be a ton of reasons why we can see it while it's happening or after the fact. I just think that we need to be ready for, if we have a pullback, I'm ready to take some action. I'm going to deploy some capital. Okay. If we have a pullback, I'm going to take some action. I'm going to deploy some capital. If I'm going to own shares, I'm going to own shares at the freaking bottom. So I don't care if I just do naked puts. If we have a pullback and I sell a put right here, probability of profit is extremely high. I might have to sit and navigate a drawdown, but if we just go sideways, eventually that time decay works in my favor. And if it's a SPY put or a Qs put, maybe it's worth a couple $100, right? Out 40 to 60 days, maybe I grab another $300 to $500. Do that on 15 accounts, make another $6,000. Okay, I'll do it. If I'm gonna buy the SPY, then debit spreads, right? Look at some debit spreads, try to get back to all-time highs. I kept asking this question, but we're right here just shy of those all-time highs. If this market turns right before we get to these highs, I'm happy with that. I want to see a turn before we get to all-time highs. But I don't think it would surprise anybody to see the market below this high out, okay, or test this high and then fade a little bit. Okay, and I say a little bit because above these moving averages, the bulls are absolutely in control right now. And even a break of this trend line right here, even a break of, let me zoom, let's go 4-hour chart. Okay, even a break of this trend line here. Okay, that trend line is a bit more aggressive. I would go slightly like that. Like that trend line, connect the low here on the right side of the trend line, connect the low here, connect the low here. All these support levels, like that's the trend line I'm watching. So that gives us a chance to see, okay, is this a rising wedge? Maybe it is. But nobody's going to be shocked to see this thing melt up higher, 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 poke the all-time highs. And like I keep saying, if the bears take out a low, then this market's interested in some type of correction. I don't necessarily want to trade that outside of maybe a cheap hedge. A cheap hedge at the top, take a $250 to $500 risk, try to make 3 to 1, 4 to 1, 5 to 1, whatever, and do that over like a 90-day window, maybe 120-day window. That's kind of it. Because other than that, it's like, I think it's just any dip we're offered is a chance to buy the dip, and this market's going to melt up. So, I mean, what's our big drama point? Well, we got inflation news this week. See how the market reacts to it. Then we get into the Fed, and then all of a sudden it's like going to be the end of the month, and it's holiday time, and there's this big beautiful tax bill, whether it's going to be passed or not. I would assume that it's going to be passed, simply because it's. I mean, you have a president that would go so vocal and so ballistic if it doesn't get passed, because it's going to derail the agenda. Even though that agenda is adding $2.4 trillion and this whole idea of Doge and austerity is crap, it's still, how vocal he's going to be, how threatening he's going to be if this doesn't get passed, right? Like, he'll put everyone on blast. So anyway, that's what I think. Any dips, I'm looking to position options. If we hit the all-time highs, don't be surprised. If we have a pullback, I think it's an opportunity just to reposition for some more income. This market is just not turning over, right? This little Elon Musk and Trump drama last week, not turning over. Like, we had but what did it do the next day? Gapped higher. Like, this was like Musk and Trump drama, and the market ended up gapping up over 1%. It's like, it doesn't care. It doesn't care right now. So until these lows are taken out, the market doesn't care. Okay, I'm going to adjust this trend line actually to this. There. That trend line to me is a little bit more in line with how price has been behaving. This support back on the 7th of May to the 23rd of May to the 30th of May. So there. If we take out any of these lows, then yeah, the bears are likely going to get the control for a moment and try to get some pullbacks. But we're probably poking all-time highs first. All right, let me get some questions. Lee says, what do you think of dollar CAD on the day chart? Level support to me is like 3,200 to 3,000. So we've got to be dropping. Yeah, it's not low enough, man. I don't think this thing's low enough. To me, this is support. 3,400 is my support. 3,000 would be like the ideal support. But I would say, this level or this level, I would just wait. Oil's looking to potentially break out above the 65 handle. That could push dollar CAD a little bit lower. Between 34 and 32, that to me is a much stronger support zone to buy. So I don't see this as support. This is just kind of noise. I'd rather buy it down here, 34 to 32, or wait for a trend line break. Currency strength chart for the day. An interesting move on the pound today. Aussie's getting a breakout up. New Zealand as well. Euro. I'm sorry, that's CAD. So Aussie CAD on top today. Swiss dollar, yen in the middle. Pound got beat up a little bit this morning after the 2 a.m. open. So there's your London breakout. Just a big move on the pound. I say big move. It's like 25, 45 vertical axis. It's not crazy volatile. It looks like it's out there. I mean, even yesterday, like very quiet in the Forex side. I do wonder if the Forex market gets a little bit more exciting in 2025. So far, it's been outside of your big dollar move. I mean, the dollar has been crushed all year. Outside of your big dollar move, I don't know if the Forex market is going to get super exciting unless it's something on like more dollar basket, more yen basket, and maybe gold gets more exciting for the Swiss. If we get a pullback and hit that 200 moving average, I'd like to see the Swiss get a little bit weaker so I can get my carry trades to pay out. Pound yen, I'm seeing the pound yen come in. Pound yen, just noise. I just see noise. So, I mean, resistance would be previous highs, support. I mean, it's just noise. So if it's gonna, I mean, pound yen to me is a scalping currency. It moves enough from London session to U.S. session. It moves enough. It's like align your time frames, get your 1 minute charts up, and see if you can scalp that thing for some precision. That's, I mean, most traders I've seen that have success with the pound yen are doing that, as opposed to like these big position trades. So if it's lined up on the 1 hour and the 15 minute and the 5 minute and the 1 minute, just looking to kind of follow alignments and keep it simple and try to grab 10, 20 pips. Currencies can move. This currency probably still moves 100 plus pips a day. Okay, so all right, what else? Let's do, speaking of dollar, let's go dollar, oil, gold, silver, some Bitcoin, do some individual stocks if you have them, do some currencies. Dollar wise, still pretty choppy. My euro dollar position is still running. So I'm up about 230 pips. I'm trying to get a poke up here towards the 15 handle, fit 1.15, 1.1550. That's my take profit. So I'm going to hang in there.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.